Forget everything you think you know about the EV market. In the next 30 seconds, I'm going to show you numbers that will blow your mind. We're not talking about a market that's growing. We're talking about one that's about to go supernova. The hydrogen fuel cell vehicle market is projected to skyrocket from $5 billion in 2025 to over $111 billion by 2032. That's a compound annual growth rate of over 54%. What do automotive giants like BMW, Honda, and Hyundai know that the average car buyer doesn't? Is this the technology that finally solves the range and refueling problems of battery EVs? We're diving deep into the data behind this silent revolution. If you want to understand where the smart money is going in transportation, you need to be subscribed to Electric Vehicle Empire. Let's get into it. All right, welcome back to the Empire. Today, we're shifting gears from the familiar world of lithium-ion batteries to talk about their powerful and perhaps underestimated cousin, hydrogen. For years, hydrogen fuel cell vehicles, or HFCVs, have been dismissed by some as fuel cells, a technology that was always 5 years away. Well, according to a stunning new market analysis by Coherent Market Insights, that future is no longer 5 years away. It's here. And it's happening with the force of a tidal wave. Let's put that headline number into perspective. A 54.3% compound annual growth rate. What does that even mean? It means the market is set to more than double in size every 2 years. Think about the adoption rate of smartphones or the early internet. That's the kind of explosive, industry-redefining growth we are witnessing right now. This isn't a gradual shift. It's a seismic event. This report isn't just a collection of dry data. It's a manifesto for a revolution in how we power our world. It transforms hydrogen from a niche science experiment into one of the most compelling investment opportunities of the decade. So the billion-dollar question, or in this case, the $111 billion question, is why? What's lighting the fuse on this hydrogen rocket? First, let's look at who's placing the bets. This isn't a game being played by ambitious startups in Silicon Valley. The roster of key players reads like a who's who of automotive royalty. Audi, BMW Group, Daimler AG, the parent company of Mercedes-Benz, GM, Honda, and Hyundai Motor Group. These aren't companies that make frivolous bets. They are global industrial titans with decades of experience and billions in R&D. When they move with strategic purpose. Their heavy investment in HFCVs is a powerful endorsement. It signals that they see hydrogen not as a competitor to battery electric vehicles, or BEVs, but as a crucial, complementary technology essential for a zero-emissions future. Think about it from their perspective. They're looking at the entire transportation ecosystem. While a Tesla Model 3 is perfect for your daily commute, what about a 40-ton semi-truck that needs to cross the country? Charging a battery that large could take hours, resulting in costly downtime. Refueling a hydrogen truck? Less than 15 minutes. It's the same speed and convenience as diesel, but with zero emissions. This is the strategic key. Hyundai is a fantastic case study. They're not just building the Nexo SUV. They're exporting their XCN fuel cell heavy-duty trucks to Europe and have a clear roadmap for a hydrogen society. BMW is actively testing its i5 hydrogen fleet, banking on the technology for its larger premium vehicles where weight and range are paramount. These companies aren't just launching products, they're building the foundations for a new energy economy. They are filing patents, forming joint ventures, and investing billions into research, securing their place in the race. So, the billion-dollar question, or in this case, the $111 billion question, is why? What's lighting the fuse on this hydrogen rocket? Now let's get under the hood and look at the technology itself and where it's being deployed. The market report breaks it down into two simple but critical segments: vehicle type and technology. For vehicle type, we have passenger and commercial. The passenger vehicle segment is what most of us see. Cars like the Toyota Mirai and Hyundai Nexo are already on the roads in places like California.
They offer the quiet, instant torque of an EV, but with 300 to 400 miles of range and a 5-minute refuel time. For people living in apartments without access to overnight charging, or for those who frequently take long road trips, HFCVs solve major pain points associated with BEVs. But the real game changer, the segment that has investors and logistics companies buzzing, is commercial vehicles. This is where hydrogen's unique advantages truly shine. For buses that run on set routes all day, for delivery vans that need quick turnarounds, and especially for long-haul trucking, hydrogen is a near-perfect solution. The weight of a massive battery reduces a truck's payload capacity, meaning it can carry less cargo. A hydrogen system is significantly lighter. This isn't just an environmental decision for trucking companies, it's an economic one. More payload equals more revenue. This is why many analysts believe that while passenger cars will be a significant market, commercial trucking will be the engine that drives hydrogen's exponential growth. On the technology side, the report mentions the proton exchange membrane fuel cell, or PEMC, as the dominant player. Without getting too technical, this is the technology that makes HFCVs practical. PEMCs operate at relatively low temperatures and are compact enough to fit in a vehicle, unlike other types of fuel cells. The ongoing innovation in this space is making them more efficient, more durable, and most importantly, cheaper to manufacture. The cost of fuel cell stacks has plummeted over the past decade, and as production scales up, those costs will continue to fall, making HFCVs more competitive. So we have the players and the technology, but what's the spark? Why is this boom happening now?
There are several converging factors. First, government policy and investment. Around the world, nations are getting serious about decarbonization. The U.S. Inflation Reduction Act, for example, provides massive tax credits for producing green hydrogen, made using renewable energy, drastically lowering its cost. The EU and countries like Japan and South Korea have their own ambitious national hydrogen strategies. This government backing de-risks private investment and sends a clear signal to the market: hydrogen is a national priority. Second is technological maturity. As we just discussed, the technology is no longer purely experimental. It's proven, reliable, and scaling up. The engineering challenges are being solved one by one, from improving the durability of the fuel cells to designing safer, lighter hydrogen tanks. The third is the slow but steady build-out of infrastructure. This has always been the classic chicken and egg problem. Nobody wants to buy a hydrogen car if there are no stations, and nobody wants to build stations if there are no cars. But with government support and strategic placement by companies like Shell, True Zero, and Nikola, the network is growing in key transportation corridors. For commercial trucking fleets that follow predictable routes, they only need refueling stations along those specific highways, making the initial build-out much more manageable. Finally, we have the pull from the market itself. The limitations of battery technology for heavy-duty applications are becoming clear. The demand for a clean, fast, and powerful alternative is real and growing every day. So, what does the future look like? This report gives us a crystal-clear vision. The dominant players will likely be the legacy automakers who have the manufacturing scale and capital to compete, alongside specialized fuel cell technology companies like Ballard Power Systems. The leading segment, especially in the early stages of this boom, will almost certainly be commercial vehicles. They have the most compelling business case and will drive the initial infrastructure development that will later benefit passenger car owners. Of course, challenges remain. The cost of producing green hydrogen at scale must continue to fall. The refueling network needs to expand dramatically to make HFCVs a truly convenient option for everyone. And the public needs to be educated to overcome outdated safety concerns about hydrogen. But the trajectory is clear. The next decade in transportation will not be a simple war between batteries and hydrogen. It will be the story of how these two technologies work together to finally end our reliance on fossil fuels. We will see a world where you plug in your commuter car at night, but fill up your long-haul SUV with hydrogen at a station on the highway. A world where city buses and delivery trucks run on clean electrons generated from hydrogen, and massive semi-trucks haul our goods across the continent emitting nothing but water vapor. The Coherent Market Insights report is more than a forecast. It's a roadmap to that future. A future valued at over $111 billion. This is one of the most exciting shifts happening in our industry, a genuine revolution unfolding right before our eyes. The numbers don't lie, the investments are real, the technology is here. So I have to ask you, do you think hydrogen is the final piece of the zero emissions puzzle? Or is the battery electric platform simply too far ahead to be challenged? Let us know what you think in the comments section below. We read every single one and want to hear your take. If you enjoyed this deep dive and want to stay ahead of the curve on all things electric and beyond, make sure you hit that like button and subscribe to Electric Vehicle Empire. The future is moving fast, and we'll be here to break it all down for you. Thanks for watching.